Welcome back, everybody, to Volatility Trading Strategies, and also welcome to 2023 and Happy New Year. Now, probably for most people, it's a big relief that miserable 2022 is behind us. What a garbage year for the markets. I'll get into everything in full detail in a minute here, but just to set the table for this video, I'm 47 years old, born in 1975, and this is the S&P 500 return distribution since then. We can see it there. 2022 was the third worst year for the stock market in my entire lifetime, only outdone by the dot-com bust and the 2008 financial crisis. But as you'll see in a minute, for any investors out there with a diversified portfolio of multiple asset classes, 2022 was easily the worst year ever, even worse than the financial crisis. Now, please watch through to the end because this is one of the most important investing lessons that you can learn. Don't ever optimize your portfolio for the outliers, which 2022 most certainly was. I'll say that again. Don't ever optimize your investing strategies to perform well in markets that almost never happen. Now, you do want to survive them, of course. You do need excellent risk management to make sure those garbage years that come around every couple decades don't derail you completely. But if you want to have the best long-term performance over multiple decades and retire a millionaire, you need to be optimized for market conditions that happen the majority of the time. In a typical 10-year time horizon, you do want to have 6 or 7 really great years. Maybe you have 2 or 3 where not much happens, and then every investor, no matter how good they are, is going to have one of those years where nothing goes their way. Even the great Warren Buffett, who's arguably one of the best investors of all time, with his world-famous Berkshire Hathaway company, even he had several periods that, as it was happening, would have felt like an absolute disaster. Time to get the hell off this train, right? This guy doesn't know what he's doing. So 6 or 7 awesome years, maybe a few nothing years, and then very occasionally a bad year when the market is just plain garbage. Rinse, repeat that cycle, and you're definitely going to succeed long term. So let's talk about that one garbage year. How bad was 2022? Am I crazy to say it was the worst investing year since I was born? Since most people haven't been investing for 47 years, I'm not that young anymore, and the world was pretty different back in the 70s and 80s. This here is a 30-year time horizon, and we can see the S&P 500 total return there for each year since. We'll also look at US Treasuries and gold as well in a second here, but there's that minus 18% for the S&P 500 total return index. Remember, that includes dividends. Again, on a 30-year return distribution, we can see it was the third worst year in 3 decades. Only 2002 and 2008 were worse. But it gets worse because for the vast majority of the investment world, we're talking asset managers, financial advisors, pension funds, they largely track something that's a lot closer to a 60-40 portfolio that includes bonds. Remember, the bond market is larger than the stock market. When we add the 20-plus year US Treasury column, now we have a huge problem, don't we? 2022 was the worst year in history for the bond market, down 31% in 2022. Here's what that return distribution looks like for bonds. Pretty crazy, right? Easily the worst year ever. For most investors that track something a lot closer to a 60-40 portfolio, sure, the dot-com bust was bad for stocks, but the bond market was actually positive. 2008 was terrible for stocks, the worst in our lifetime. But 20-year treasuries were up 34% that year. When we look at a 60% stocks and 40% bonds combo, it's not even close. This is why last year felt so terrible for so many people. For our entire lifetime, most investors out there have been counting on the fact that when stocks do have a bad year, there's going to be other asset classes out there that pick up the slack. The problem with last year was that many other asset classes were down as well, some of them in deep double digits. Now, gold did have a reasonable year, all things considered, down about 1%. But for the gold bugs out there, you could argue that in one of the worst years in history, it would have been nice and evidence of strength if gold did have a great year, not just barely negative. Kind of like crypto, right? A so-called store of value, and it was down 75% last year. But anyway, for people who had a decent gold allocation, it would have improved things a little bit, but not nearly like previous years. In the dot-com bust, gold was up double digits. That's what you'd want to see when the stock market is melting down. You need some other assets to balance things out. Here's a 50% stocks, 30% bonds, and 20% gold allocation, and that one was down about 18.5% last year. Again, we're kind of splitting hairs. It was by far the worst year we've seen. And what about those people who had a large allocation to some individual stocks and they were rewarded in previous years for that? But last year, Tesla was down 66%. Facebook, Meta, down 65%. Amazon, down 50%. Even Apple, which seems to sell 1 billion iPhones a year no matter what the economy is like, it was down 27%. And don't even get me started on the former darling of Wall Street, Cathie Wood, and her ARK Innovation ETF. It was down 67% in 2022 and down 75% from its all-time high. So I think you get the point here. It was pretty much across the board an abysmal investing year. And if it was your worst year since you started investing, it was actually my worst year as well in almost 2 decades. I think we can forget forgive ourselves a little bit. There were actually very few places to hide. On the VTS side of my portfolio, I do have 3 strategies that use stocks, bonds, utilities, real estate, gold, etc. And those strategies were down. Now, we improved a little on buy and hold because we're tactical and moving in and out of the best positions. But there were no safety asset classes to move to, and it did cause some problems. Even for my portfolio, which is designed around consistency. But if you followed my work over the years, you'll know that I'm also a very active options trader. I started my career in 2005 as a derivatives trader. I love the versatility, the risk management, and the diversification power of designing option strategies that are not correlated to the stock market. My portfolio of option strategies actually saved the year for me. Due to the fact that it was a high volatility year with so much choppy market action, my Iron Condor strategy had a great year. It was up 25%. My flagship strategy, and the one I allocate the most amount of my personal account to, called VIX options, it was up 25% last year as well. It's not dependent on the market going up or down. It's non-correlated, and because of that, it was quite consistent. My volatility trend that uses UVXY broken wing butterflies. My earnings play strategy, which is long volatility. And the Wheel of Fun, which is somewhat of a buy the dip strategy. These were all up double digits, and it helped me to basically break even for 2022. Across my whole portfolio, including my options trading, I was only down a few percent. Now, it's still negative, and I've never had that before, so it's not like I'm going to go around high-fiving here. But given the magnitude of how bad 2022 was, I think it's fine. But the big lesson in this video that I want to circle back to now is, what are you going to do going forward? It's a new year, and we're already near the bottom of the market, at least from the last year. Now, who knows? It might go a whole lot lower. We'll have to see. But should you be scrambling around making major changes to what didn't work for you last year? I know for me personally, I'm not going to do that. I think that's a terrible idea. The strategies I've designed and how they complement each other in a diversified portfolio have done awesome for me for many years. Like I said in the intro, this is Investing 101, a very important lesson here. Don't ever optimize your portfolio for that one outlier year among a decade or longer. You want to make sure that 80% of the time your portfolio is doing well and you're moving those chains down the field. You want to make sure that you're focused on what's going to happen most of the time. I know for me, aside from a few tweaks here and there, I'm not going to make any changes to what I do. As they say, if it ain't broke, don't fix it. Now, you're going to have to make an honest assessment yourself for what you did last year. Was that just the result of an outlier? Or perhaps are you actually unprepared for how difficult investing is going to become going forward? Shameless plug here, but now would be a very good time to claim your free trial to VTS and check out our strategies and see my daily email. Over the next few months, we're going to be talking a lot about the state of the market and how we can succeed over the next 10 years and beyond, because it won't be easy. The financial markets are all but broken at this point, and the powers that be don't seem to have a clue what to do about it, other than maybe break it some more and see if they can kick the can down the road a few more years. If you want to see what I'm doing, there's an open invitation for you to join us here. It's a free trial, cancel at any time, but you'll definitely want to check it out. In my opinion, diversification into volatility and option strategies that are non-correlated to the stock market has never been more important. Thanks for watching. So for an extensive volatility metrics dashboard updated daily, and to see all of the live trades for our tactical rotation and option strategies, click this link right here and claim your free trial to the VTS community. You're always welcome to join us anytime. See you next time.